From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for February 16th, 2016. In today's video analysis, we're going to be looking at the AUDUSD, the Australian, versus the US dollar. We're going to start here on the daily time frame. We can see that in the long term, this currency pair has been in a downtrend. We go all the way back to the beginning of 2015. We started up here at the highest highs and have been moving down ever since then, making a new multi-year low in the recent weeks that we've seen down here towards the 0.6800 level at the very bottom of the chart. If we go out here to the weekly time frame, we can see that this downtrend has actually been in place for quite a bit longer. We go all the way back here even into 2012 and 2011 at the top left-hand side of the chart. Back to the daily time frame, what's most important I think for the day today is this black trend line. We've connected our last two major highs within the downtrend with the black trend line. Over the past several months, we've studied this triangle pattern between the two red trend lines. We saw a rise, a fall, a rise, a fall, a rise, and eventually a breakout to the bottom side of that triangle pattern and a new multi-year low being made down here towards the 0.6800 level. In recent weeks, we've seen a rise back into and challenging underneath that triangle pattern and the long-term black trend line. We saw it a couple of weeks ago, challenge into there, fell off of it. Guess what? Here we are again today, right into that same trend line. Let's go ahead and zoom in here a little bit on the daily time frame. I have a couple of different ranges drawn with Fibonacci here on the chart. We went from the last real high that it made inside the triangle pattern. So the last high, the last resistance inside the triangle, down to the lowest low. We went from the lowest low to the most recent resistance high, and from the recent high down to the most recent low. So a few different ranges drawn with Fibonacci. What's interesting is we see some overlap of Fibonacci at several of these levels. First off here, at the orange shaded area, we see some Fibonacci of one of the previous legs coming right here into the 7180 or so level. We see other Fibonacci levels sitting here at the blue shaded area. Both of those providing us a clue to where our current resistance and support is. We also see a little bit lower down here towards the green zone and a little bit higher. Obviously, the last high that we saw was up here at the yellow shaded area. So we know where our closest support resistance levels are, not just with Fibonacci, but if we look back in time, just follow the orange zone first off right here, right around the upper 7100s. Follow it back in time, we see of course the last resistance, but you look back here where this blue box is, a lot of support in that same level. Just to the left of the blue box you see resistance, far left hand side of the chart you see resistance. So we know the orange shaded area has been a pretty significant decision zone where buyers exit and sellers enter. We call that resistance. It's also where the blue box is been support, where sellers exit and buyers enter. We call that support. So we see that it's a real significant decision point for the Australian dollar. So we know that we want to potentially make a decision in that same area. Just underneath the current market is the 100 period moving average down here closer to the blue shaded area. We are a little bit above that before now, but we've been above it before and the market returns back lower. We could see that the last time that happened here. So I'm not too concerned with that, but it just gives us a median where the market has been median, finding support, resistance, congestion. It's been above it, it's been below it. It's finding a median price right there, right around the low 7100. So I would expect that that could be a place where we see the market return down to if we decide to get in short. Remember, trading's all about finding low risk and high reward decision points. You're never going to find a no risk decision point. There's often going to be times where you sell it and it goes up, you buy it and it goes down. So what we want to do is find low risk and high reward. Well, looking at this orange shaded area today, we know that historically it's been a decision point. We know that as long as it stays underneath it, there's likely resistance. And really, only if it breaks out above it do we expect it to continue to pressure higher towards the yellow zone. So this becomes a fairly low risk and high reward decision point. If it goes back down in the direction of the long-term trend that we looked at on the zoomed out view on the daily and the weekly, then this becomes a point, a lower high within the downtrend that we could be looking for a new low to be made back down under 7,000. We could even see a new low all the way back down into the 68s. Of course, the risk is that it breaks above the orange shaded area 7200 and goes back up again, and so it becomes a low risk and high potential reward opportunity right here underneath the orange shaded area. Let's take it down to the 4-hour time frame. Again, Looking here, we know that the orange zone is a decision point. We can see that here even on the 4-hour time frame, where the market's just been kind of bouncing around underneath it over the past several hours as resistance into that level. So we know that that becomes a significant decision point for us today for the Australian dollar. I'm trying to get this orange shaded area selected and drawn over a little bit more. So we know that the orange shaded area is resistance and becomes a decision point for us today with low risk and higher potential reward. So selling into the 71.65, 71.70 level becomes an opportunity. Of course, your risk and stop loss is going to be above that level. How high you put that risk or stop loss, of course, will be up to you. But I like these Fibonacci levels that live up here into the 72.20, 15 level. That becomes a pretty decent area to look for risk. You can see our last little spike over here on the left hand side as well. If you're uncomfortable with putting it that high, you could of course put it just a little bit lower above 72.05, 72.10 if you don't want to give it that much risk or higher. Of course, your first support that the market will run into will be the blue shaded area, and then beyond there, if we can break underneath the blue shaded area, we will look for it to head on back down here to the green zone. The further down it goes, of course, our potential reward increases, our risk becomes smaller, our reward becomes larger. As it goes lower down below the green zone, the pink shaded area becomes a significant break point. If it tests there and breaks underneath the pink shaded area, we'll look for likely a new low to be made here for the Australian dollar. All in all, the risk is a break above the orange zone. We'll probably look to get out of it. So I have a pending order sitting here at 71.70, just at the bottom of our orange shaded area. Let's zoom it in a couple of times. You can see it's already been there a couple of times. I just recently put on that pending order, so it hasn't taken it in. But any spike into that 70 level, I'll be looking to go short, targeting first 71.35.40, the blue shaded area. Beyond there, we'll look to target all the way back down into the 7,000s for the Australian dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.